Hi, Oscar.
Bonjour, madame.
How are you?
Okay, all right. So, sorry, I was just getting things set up on YouTube Live. So we are here. Welcome, everyone. It's a wonderful Friday. Welcome to the KoreSummit Webinar Series 2021. Once again, we have some great panelists this morning for this great discussion. For those who are joining us for the very first time, the format is very simple. It's just really, there's no PowerPoint presentation, no slides. Basically, having these two great speakers and myself engage in a conversation, which will then, just at the last part of the webinar, we will give you an opportunity for 15 minutes of any questions you may have for them or for all of us to answer for you while we're having this discussion. And today's discussion is really exciting. I've been waiting for this one. Secondary market trading for Reg A. I mean, this is it. We're actually having the discussion. We're gonna have it, and so we're going to start off, first of all, by having everyone introduce themselves so you have a better idea who our panelists are here today. And ladies first.
Thank you so much, Oscar. My name is Shari Noonan. I'm the CEO and co-founder of Rialto Markets. Rialto is a FINRA registered broker-dealer and an alternative trading system, or an ATS, that really facilitates the entire private markets infrastructure from primary offering to secondary trading, which I'm very excited to talk about today. Andrew?
Hi there, I'm Andrew Stephenson with CrowdCheck. You may have noticed on the invitation and the materials for this webinar, Sarah Hanks with CrowdCheck was originally billed to be speaking, but Sarah is actually this morning is attending the meeting of the SEC's Small Business Capital Formation Advisory Committee meeting, which sort of on topically is having a discussion about sort of small companies and public trading markets. So so there you go. But yeah, CrowdCheck, we are a sort of kind of two hats, due diligence and disclosure firm, as well as a law firm, and we assist companies with getting getting prepared for Regulation A offerings, undertaking Regulation A offerings, and then kind of keeping compliance after the fact.
All right. So I was wondering, you didn't look like Sarah. So, you know, I clearly, I don't know if you noticed that, Shari, but it came right at me. I go, you're not Sarah. Okay. So, but you know what? It's obviously having both of you here today, so timely to your point, Andrew, that at the same time, while we're having this discussion, there's one happening right now at Capitol Hill regarding the state of affairs for all of us. And I think it's only going to get better. So, you know, the whole discussion of secondary market, we're now having it, and we're going to break it down for people. So you kind of get it in bits and pieces, not kind of scrambled around the way it's been showcased before. And I think this will help everyone understand all the different parts to it, because I think there's some bit of pieces that we've discovered people forget to mention. So let's go through the legalese first of all. Obviously, Andrew, I'm going to come to you on that because you and I, we work very hand, and of course, Shari. But let's start with that. Let's talk about secondary market trading, Reg A. The regulation, it clearly, I mean, it's sold as a free trading security, but you know, what are from a legalese practical point of view, we need to be aware of?
Sure. So, so one of the kind of the great innovations from Regulation A, from as far as regulatory innovations can be, was that when utilizing a Tier 2 offering under Regulation A, so you're providing audited financial statements, you have ongoing reporting requirements, that the initial sale of those securities preempts state review and state laws, and that and then those securities are freely tradable after sale, and that's under federal law. So so typically the underlying principle for any securities transaction, that the transaction, offer and sale of the securities needs to be registered or exempt. And that applies to secondary sales as well. So So under federal securities laws, the secondary sales of RegA securities are freely tradable. They have an exemption, so long as it's not the issuer reselling or an affiliate of the issuer that's reselling the shares. So anybody who buys securities in a Regulation A offering that's not an affiliate of the company now has freely tradable securities that don't require any sort of additional permissions on the part of under federal law to sell those securities. State law is another issue. The preemption only applies to that initial sale by the company. It doesn't apply to secondary sales by investors. So when investors are looking to sell, it's kind of tough to find a market. If an investor potentially if you're going to your friends and family, that's one avenue that would likely be covered under state securities laws as being an isolated non-issuer sale. But that's not an effective or efficient way to make those sales. You'll probably, if you do want to sell, you'll need to go to a public platform or do some sort of public solicitation. And to do that, actually, then now you don't really have that isolated non-issuer exemption available at the state level. And so there needs to be so you need to rely on other exemptions that are available. The most commonly relied on exemption is called the manual exemption, which is something that is a very kind of just antiquated concept. The manual exemption was first written into kind of the Uniform State Securities laws in the 1960s. And it's been there ever since. Because the idea then was that, it made sense at that time that, we need to ensure that there is a uniform set of information available about a company that any investor can have access to know to have current information about the company. And so both sides of a transaction are fully informed. And so that was the purpose of the securities manual. So they're published by private companies, so S&P, Mergent, and with only kind of Mergent really being the only one existing today, it would just have basic information, identifying information about the company, about its outstanding securities, some financial snapshots based on audited financial statements. And that just had to be published in the manual. And now you have a manual, and now you're eligible for so because the company has put in the effort to be in this manual, now investors can resell. Some states have updated their securities laws, many have not. And so that means, some states now say, okay, if you're current in your EDGAR, in your reports to the SEC that are published on EDGAR, you can rely on the manual exemption. But not every, but most states haven't gotten there. This is an issue that it's an issue that has to actually go to state legislatures for them to change. And most state legislatures are part-time affairs that only meet like 3 months a year. And it's just not an issue that's high on their list of to-dos. So it often just gets ignored, or just nobody brings it up to them. So for many, for the state level laws, we're kind of working in the 1960s. Some have updated to the 1980s. Some have even updated to 2002, which is the most recent version of the Uniform Securities Act. But even then, the manual exemption, it's still, even for those, it's still an antiquated concept because they're working off of a 2002 update to the law that was really based on fact finding that was done in the late 90s. And the communications tools, as we know, have dramatically changed in the past 20 years. So that's kind of the state of the law. They're freely tradable securities at the federal level. You don't need resellers that are not an affiliate of the company, don't need an exemption at the federal level, but there still needs to be an exemption at the state law level. And the manual exemption is the one that covers most states. You get some that don't have the manual exemption. You can kind of get through it through sales utilizing a broker dealer. And then there's California. And California is the complete outlier to all of this. And California doesn't have any sort of exemption. It's the only exemptions available are where the state law has been fully preempted for sales on national securities exchanges or sales to accredited investors. And this is on resale. So so you can sell to accredited investors as a resale, but those securities then become restricted at the federal level too. So it's not an ideal choice. But for California, you actually need to, the company itself needs to register for non-issuer resales. So yeah, so that's the state of kind of blue sky. It's not a pretty picture. It's not great for resales, but it kind of leads to where the market is today on that.
So if I can jump in, one thing that we've worked with CrowdCheck and others, and Oscar as well, is really building the infrastructure to cover that for an issuer, so that, you know, an issuer is not having to download 50 forms and figure out where to send them. Figure out, you know, so
I was flabbergasting there.
Yeah,
too much.
So really, you know, abstracting that and taking that process away from the issuer and covering those requirements is really critical. So if you are thinking about, you know, if you have done a Regulation A raise and you are thinking about, you know, enabling or engaging with a liquidity, a secondary ATS or other, one question you should ask is, how are the blue sky laws being taken care of? Are they automatically taken care of once they get on this platform? Or is there something else I need to do? Because unfortunately, you know, the issuer is responsible to make sure that, you know, this is all sort of dealt with. And so, you know, it's really important to make sure to ask those questions, and you don't need to know, you know, each of the 50 states' individual levels of pain. Just know that they range from not painful at all to incredibly painful.
Yeah, that's a great summary. I think the key element here for this webinar is to make you aware that on the secondary, the steps are more onerous. That doesn't mean that there isn't a way to do it all, and there is. But most important for everybody listening in, whoever's offering this to you, you've got to be asking the question, all 50 states. This is a trick question, and because we say, yeah, we cover some states. No, it's got to be all 50 states, because as Andrew indicated, there are some states that there's a different way of doing it. And they're obviously, the industry now is packaging all this up for you. So you say, I do want secondary market, and boom, it automatically does everything for you. And there's still a lot of work behind the scenes, of course. But the benefits for you and your shareholders are that you never have to worry about, you know, have I met my requirements, and have I given my shareholders the free liquidity that I promised them during the capital raise element. So
yep. That's a good point. It was really about the benefiting the investors when trying to create a trading market. Because if you're not hitting all of the states, then it requires every transaction requires sort of a manual, sort of a kind of on paper analysis of, is there an exemption available for that buyer? Is there an exemption available for the seller to match with that buyer? And so it really drags down the whole process, and it makes it that it's really not an open market. It's kind of, you get back to, kind of mentioned earlier, it's just, yeah, you're just limiting your investors to selling to friends and family, just kind of, yeah, sort of just, yeah, over the kitchen table, not over the counter, just
well, it's just not going to be possible if we're on one side, we're trying to democratize where people are investing as low as $100, and then you want, you know, they're expecting to trade it, and then all of a sudden to trade $100 is going to take 6 months, and it's going to take so the math doesn't work. But obviously now, you know, I know Shari and I know CrowdCheck, all of us, the whole industry, we've come together and said, you know what, we can do a $100 trade, and there is a way to doing it that is cost effective for everybody around. But we're just making you aware what is going on in the background. You know, the problem with things sometimes is when somebody provides it to you, here it is, here's a simple pricing, you have no appreciation what's happening behind. So this is just as important. I don't want to leave the legals yet, because one of the things that I've discovered, people go, yeah, I just want secondary market trading. I'll just go to the ATS, pay my listing fee, and I'm done. No, you're not done. I mean, this is what this discussion is about. It requires the secondary market, which Shari will talk about what her requirements are. There's the legal aspect as well from the company. That burden where nobody knew what to do, it's been figured out. But you still need to make sure that whoever you're speaking to, you're asking all 50 states, right? All 50 states, right? Because otherwise, to Andrew's point, you got a real mess coming down your way. So obviously, this will be more clear once you start seeing this information out there. So Shari, obviously coming back to you now. So we heard it from the legal, obviously legal's trickled down to Rialto being the very first secondary market in the United States for RegA retail investors, the $100 trade. So your end, you also have regulatory elements that are required.
Absolutely. So we have issuer requirements. Usually they line up pretty nicely with reporting requirements as required for tier 2 offerings. So however, there are disclosure requirements and other issuer minimums that we do require before coming onto the platform. And so that's really just to make sure that, one, this is the right time in the company's life cycle to, not just raise the money, but to have their shares on an ATS, on a liquidity venue, and that the investors are getting the information that they need from a price discovery perspective to be able to make that educated decision. So if you want to think about it, and then there are some governance items as well, but broadly speaking, those are the items that are required. And what we've done is we've really taken a very manual process that has a lot of friction in it, and automated and scaled as much as possible, so that if you think about the stock market back in the 60s or 70s, you had runners on Wall Street running tickets at the end of the day down to really classify everything, and that put a top on the ability to scale of the market. And as everything went electronic, it was able to scale much more easily and quickly. And that's really what we're trying to provide, is that infrastructure for the private markets to allow issuers to reach as many investors as possible and provide their investors with a monetization mechanism at a cost-effective way.
Always cost-effective. I know you and I keep using that word all the time. It goes to show you how sensitive we all are in the industry right now to bringing the cost down. We're not trying to make it onerous, we're trying to reduce it. But in order to do that, all of you here need to be asking the right questions when you're going through your offering. It's no longer just, hey, give me the invest button and I'm off to the races. It isn't. It could have a consequence for you on secondary market, because to Shari's point, imagine onboarding 30,000 of your shareholders. If it's done in an effective manner, even if she could offer you a $100 trade, there's still the onboarding of you. That's the easy part of the company, but the shareholders also need to be onboarded in a way that it makes sense for everyone. And that's there today. It's all 100% there for the market. But now I'm going to ask some very specific questions that I've been asked a lot and I've never been able to answer. And not because you haven't taught me. I always feel it comes better from you. So because you're experienced, and so obviously people go, I'm excited about secondary market. Does that work like an exchange? And what's the difference? I mean, we didn't cover that, but we're here at this stage. So what's the difference between an exchange and a secondary market?
Andrew, do you want to take the first cut and then I can come in from a legal perspective? I mean, I'm happy to take I'll take the opening crack, and Andrew, you can,
I can
whatever I've missed.
Yeah, sure. Yeah, that sounds great.
Okay, perfect. So an exchange has members and is a self-regulatory organization. I'm getting a little technical here. And an alternative trading system is really, has oversight from the SEC and from FINRA, and is a broker-dealer. So you're first a broker-dealer. Not all broker-dealers are ATSs, but all ATSs are broker-dealers. I'll sort of put it that way. And really what an alternative trading system does is it facilitates the matching of trades, much in the same way as an exchange, but they don't have their own rule sets. They don't have their own membership in the same sort of organizational way. So now, Andrew, I'll turn it over to you from any legal perspectives that I've missed on that definition.
Yeah, and I think the important thing one of the important things on the legal side to note is that, I mean, there's the creating a marketplace for securities is very regulated. We've worked with a number of companies that thought they found a way around. They thought, you know what, we want to provide our investors liquidity, and we want to, so kind of create this interface where they'll be able to communicate to buy and sell. And often this comes right back and says, well, can you, it sounds like you are undertaking activity that requires registration as a securities exchange. And let's tell us why not. And it's always the only way to get to the how is it not is that it really is a completely ineffective system for creating liquidity. It's that you can sort of create a communication, that it could be a communications tool that only allows people to talk, but you can't create any binding commitments or they can kind of agree, they can communicate to agree to terms, and then the final execution has to be done through through an unaffiliated broker dealer. If they're directly sent to a broker dealer, then now you have a securities exchange. So there are lots of ways that get tripped. So that exchange definition is very broad. Anytime anybody is creating a facility for bringing together multiple buyers and sellers, it's a securities exchange that fall under the Securities Exchange Act, that either needs to be registered as a national securities exchange, or can be under the as an alternative trading system sponsored by a broker dealer. So and so because of it really requires then having one of those entities in the mix to actually make a trade happen. Otherwise, it just goes back to just a kind of a paper process that is just ineffectual for actually creating liquidity.
Yeah.
So the obviously, because of the ambiguity, it's new, right? We're hearing the buzzwords. Everybody's talking about secondary market, and nobody's seen it yet. I'll be honest with you. I always tell Shari that I've yet to see it. I keep hearing about it. I always say, can I? And the one thing that I know that I get questions a lot from people. Okay, so how do I protect myself? Now I'm talking from a company perspective. I don't know the end. How do I protect myself from somebody shortening my stock? So again, keeping in mind that the only education everybody's had for the last 30, 40, 50 years is stock exchanges. And so that's one. So Shari, I'll put that one on you right now.
Absolutely. I was going to say the only question I won't take today is about GameStop. But so, when you talk about shorting a security, there are certain infrastructure components that need to be in place. In terms of our alternative trading system, we do not allow trading on margin or lending. So there's not a facility to provide a short view on the security. You can sell it if you own it and you don't like it anymore, but everything is there's no lending facility, there's no margin facility that's available. So I don't think that there will be, at least from a Rialto perspective, we're not enabling that type of trading on the ATS. Andrew, I don't know if it's anything different.
No, it's just, it's positive for them to hear. Obviously, these are a lot of these individuals and companies are raising capital. They're concerned with their price. They want to stay private. They got some people that came in early and they want to cash out. And how do they're all about want to protect that in order to do the next capital raise. So obviously, I don't want to put words in your mouth, but you are working with the issuers the entire journey. It's not just I'm your ATS and get out the door, right?
Absolutely not. In fact, we work on different types of protocols and different price discovery mechanisms to make sure, one, the investors have the appropriate information to make a decision, but then two, that the type of trading provided on the ATS meets the issuer's needs. So for example, there are some issuers that, you know, only need liquidity once a quarter, once a month. That's perfectly fine. Others want it every day. So it, to me, it's really fitting in what the issuer profile and shape looks like and the needs of that specific issuer into the protocol that's most appropriate for them in a responsible way. Responsible.
That's great. You know, that's a great way to put it. And that's a good carry on for everybody to understand that this is not like where the stock exchange, you get listed, the exchange is sitting one end waiting for their fees. What you're doing is you're working with management. You're understanding what their requirements are. Maybe today they're not raising capital, but you know, they come back and say, you know, Shari, we're going to do a capital raise in September. What should we be planning for? And that's where you can come in and strategize with them. We're going to halt it when you go live, and then we'll turn it back on, or whatever mechanism they may want, right?
Absolutely. We don't want to be in competition with the current raise. And we also want to make sure that we maintain as orderly of a market as possible. That's really critical. I mean, this is my 4th ATS that I've built and operated, and our team has built and operated about 9. So we're very familiar with the way that the markets work, both on a liquid side as well as an illiquid side. And I think that's an important part to really touch on is, you know, when you move your security onto a trading platform, a secondary trading platform, it's really important to understand the expectations of liquidity. Simply by putting it on a trading platform, that doesn't mean it's going to be a liquid security that trades like IBM or another type of very, very liquid security. That's not sort of reality here. What we can do is we can work with you on each of the issuers on, you know, what they're looking for from a liquidity perspective, and it might make sense or it might not make sense. So there are different options. Again, this is not just sort of one size fits all, because every companies are different in this space, but most of them are not very liquid. And so to temper expectations, putting it on a trading platform is not going to make it liquid. But what we do is we reduce the friction for investors to monetize that and bring a larger audience of potential investors in to see the security.
And that's a great touch point. And I'm not trying to skip you, Andrew. It's just that I've been putting all the questions that people have been throwing at us regarding, there's so much curiosity now from, you know, the legals are very important. Don't get me wrong. Without the legals, all of this is moot. But one thing that you touched on there that we've spoken about this before, and it is, you know, it could change your path. So as you all know, when you're doing a RegA, you're getting, let's say, 1,000 people to your invest button, and only, you know, let's say out of that 1,000, 100 invest, and obviously the other 900 you still have, and maybe you're not taking them on because they're coming from different countries. Well, secondary market can play a role in that, right?
They can. Now, again, I'll state that there's a lot of infrastructure involved in this, so please don't try this at home. You know, there's a lot of infrastructure that's involved from the regulatory perspective at bringing an investor base in to participate with a security. So we work with lots of different groups, and we work with lots of different partners to facilitate a large audience. But again, I will stress there's a lot of regulatory you know, overlay that's placed on that. We're just abstracting that from the actual issuer.
Okay. So the one part that during the phase of from the legals to the ATS and understanding, we talked a little bit about the liquidity, and we'll come back a little bit more on that just before we close out. But I want to cap off on this part, and I'm coming back to you and Andrew, because, you know, okay, so we got the states, we got the ATS, but there is other components as well. We keep hearing about DTC. Does that come into play? QSIP. Do I need that? Do I need to register that particular security? So, you know, there's still, again, we're staying private. Let's just make sure we keep the conversation to private. I know what the public world is. this is purely to stay in private. Can you just walk us through a little bit? Obviously, this is handled while we're doing all the back end components for the issuer, the company. What are those other additional pieces of registration that need to happen?
Do you want Andrew to take that, or do you want me to kick it off?
Sure. Why don't you go ahead and kick it off? Because I think much more experience on the kind of practical side of.
I feel like I'm playing a football game with you guys.
Absolutely. No, so perfect. So in terms of when a company comes to us or an issuer comes to us, we feel very strongly that these securities need to fit within the current infrastructure of the financial services or capital markets. So we will work to apply certain identifiers to the securities. Those are called QSIPs. You can also hear them as ISINs or CDALs. But that's really, that helps for as the market expands. And as more institutional players come into this market, it will facilitate that flow into their systems and their stack, because we feel very strongly that we don't want people building new stacks. They just won't. So we want these things to flow through the traditional capital markets infrastructure. We'll handle that with the issuer, but the issuers should just be aware of that component and some of the more technical components. In terms of DTC eligibility, you can apply. There's really not a reason at this state. You may want to hold the securities at a custodian if there are certain groups that need that type of infrastructure around the way that they invest. But those are usually investors that have more fiduciary responsibility, like RIAs or others. All of this is available to an issuer, and it really just depends on where they're looking for the build out and what type of if you want to think about it, what type of buttons to push and what types of optionality to put on their security. Andrew, did you want to jump in and add anything?
I know nothing too substantive. I mean, so there's just to reinforce that, especially on in referencing kind of RAs and other institutional investors, is important, because that's likely going to be there aren't too many investors who are just kind of sitting around, and unless something makes it onto Reddit and Wall Street Bets, you're not going to have just large numbers of retail investors who are going to be coming and going. A lot of movement is still dominated by investors and institutional investors who want to see that you are participating in those traditional stacks, like your QSIP and use of a custodian. And so those are certainly aspects that need to be considered and accounted for when moving on to an ATS. That it's not flip the switch and go. There are steps in the process.
Perfect. I think we've so I told you we would come back to the liquidity. So we talked about, you kind of touched on it, Shari, price discovery. We're going to get to that. But one of the things about price discovery that we're now having a discussion on, and it's good for everybody that's here to listen to it, we're starting to see a new market emerge of research. Now, we've seen this in the public world. Now we're seeing it in the private world. And I want to hear from a legal opinion. I'm not going to stick you to it if you're uncomfortable with it. I have my own opinion on these matters, but more importantly, obviously, it's here. It's finally here. We got to have the discussion. We got to alert people to it, because what are the consequences if it's a particular type of research that's being done? What should the company be doing to involve themselves in it, or should they just stay away from it? And when can they be involved and not? Because there's a bit of a confusion in that end. I hope you agree with me, and Shari. We've had this discussion before, so love to hear your comments on this, Andrew.
And the research reports are important, because it's another mechanism of getting information about the company out into those standard and traditional channels. And it's going to be hard to find Haven't seen it yet in regards to RegA. It's really not an area that is getting touched on, but it's also because there's not a secondary market for it. So you don't have any reason for investment analysts to prepare research reports. So it's definitely, it's a kind of a little bit of a chicken and egg right now. But I think it's going to take maybe 2021 is going to be the year for that, as we start seeing companies that have done Regulation A offerings sort of maturing in ways that will gather interest on secondary markets, which would then drive the interest of research analysts to do work and to publish and to work with those issuers to understand the information. And certainly, I think the risk is that you may get some kind of initially the ones that will want to enter the space are a bit unscrupulous. They may write in a way that is not favorable to the company, because anytime a company participates in creating information about the company and its prospects and investment potential, that's a communication from the company itself. Their participation, while they may not be and there's a little bit of uncertainty right now in securities laws about who is the maker of the statement. Is it just the maker that has liability? But kind of a bottom line principle, if the company was involved in the preparation of the materials, it's their statement. And so you want to make sure that you're working with a research analyst who will publish accurately, will not use excessive flourish, and ensure that there's not going to be anything that could come back to the company as being potentially misleading.
That was so politically correct. I'm glad I'm not a lawyer or a broker dealer, because I have to say it the way. No, I know Sherry's eager to step in. I'll let you go first, and then I'll go in. Go.
Okay, this is such a fascinating field to me, because again, this is one of those fields that it traditionally has been very intensive to prepare research, to get it out. So from a cost perspective, it was expensive. It was an expensive endeavor, and so if a company wanted to be covered, either they had to be in an index or reach a certain threshold, and then below such a point, really research did not make sense to be prepared, just because it was an expensive endeavor. Having said that, there are some really fascinating breakthroughs in terms of, creating research in a scalable, cost-effective way that provides both, information as well as analysis in scale on companies. And so that's an area of the market I find really fascinating, because we know in terms of building a marketplace, one thing that we're going to have to get better at and work on are those areas of providing price discovery mechanisms to investors. Because unless you are on a Reddit subgroup, people are going to want fundamental analysis to back up why they're buying you or selling you. So that's a really interesting area that I think is going to go through a lot of growth, especially as RegA expands. And we're working with a number of different groups, Oscar, I think you're familiar, to be able to provide that infrastructure and that availability to investors.
Yes, and it's true. It's just starting. So what are we telling you? We're telling you, what the lawyer's telling you is, you put your hand on it, you bought it. And when you buy it, that means anything that's in it, it's on you. So my rule of thumb is the following, that I'm telling you from one seer to the other. Let them do their research independently of you. And if it's good, great. Just let it be there on its own. So there are those that are conducting research right now that I'm seeing using the First Amendment. There's nothing wrong with that, but it is the First Amendment. It's not a registered broker-dealer. It's not a registered analyst. It's using the First Amendment in the United States, which allows them to gather public information and produce a report. From that perspective, that you need to stay as far away from it as possible, regardless if it's good or bad, just so you protect, because Andrew said it will be part of your offering the minute you put your hand on it. If it's done by a registered broker-dealer, that's different. You have a registrant that's there that can take the responsibility as an analyst. But always keeping in mind that it is a new industry. Everybody, I think we're all watching it. We're encouraging it. I'm an entrepreneur. I'm encouraging this type. We're going to see better, elements of it coming out, but there has to be best practices. There needs to be standards to protect you, because ultimately here is what it comes down to. Andrew will still have a job. Andrew will still be a lawyer. Shari will still be a broker dealer, and you might end up in a nice, beautiful orange outfit. And we don't want that. That's the point.
And I think that's the real key here, is that, one, this market has evolved where there are market participants that can provide the services that are needed in a cost-effective way. So there's no need to do it yourself. There's no need to try and do this yourself. And two, it's really complicated. It's incredibly complicated. I've been in this industry for 25 years and I'm still learning things. It's a very, very complicated world and marketplace, and there are lots of different rules and regulations and laws, and it's not worth the risk. It's not worth it.
Exactly, because once this risk comes into your arena, it could deal with a number of things where you may need to refund everybody. I mean, and the reason why we care is because if that refunds occur, it could affect us all. So we obviously want to make sure everyone is, and if you're unsure, the beauty of this ecosystem, whether it's Andrew, Shari, or others, is that they're going to share with you information to help you and to ask the right questions. We're not saying don't work with that, but make sure that you go in with your eyes wide open, is to make sure what are the effects of going forward. Because the SEC is paying attention, and we want them to pay attention. We want them to embrace this. Just the same way the SEC on November the 2nd said, we see that this is working and we are going to increase the limits. The same way we want them to embrace. Shari's firm took, 2.5 years to get the approval from FINRA, the SEC?
That's right.
Easy, right? 2.5 years to be able to do this. So we need to do it right, and we want to work with you in that process. There's going to be a lot of questions. Each of you will have individual kind of offerings. You'll have a mix of investors in your deals, obviously working with Rialto Markets, whether you have accredited or Reg CF investors with your RegA. They're not excluded. You're just, this is all part of we've been talking about RegA because that's the big discussion on the primary, but we're not excluding your ex-investors either, right? This is everybody encompassing.
Correct.
So, all right. So normally what we do, I'm going to ask Andrew, obviously, going to ask you again, put you on the spot, man. There it is. I got that. Any last remarks regarding secondary market? You've been at this since the beginning. It's finally here. I know that we were talking about a lot of different models before, but it's finally here. So what are your thoughts on that for companies going forward?
I think it just fundamentally it's making sure that a secondary market is something that you want. If you're a company that's so if your RegA offering was your outstanding freely tradable securities, and that you're willing to take on even if not through RegA, but then you have outstanding freely tradable securities, and you're willing to take on ongoing reporting requirements to provide information to a securities manual. So just think about what you have outstanding. If it's a type of preferred stock, that because it's really more about sort of hitting another milestone to convert into common stock, maybe you want to hold off until your stock is just common. And so to have that single class out there, if you are anticipating lots of ongoing new raises, maybe you don't want to be trading yet, because that's going to because it's going to kind of conflict with you're going to see a little bit more volatility in your trading price as you are kind of closing that for new raises. So it's But if you're at the point where, you know what, this is where you want to be, because it allows you to create liquidity for your investors without going to a national securities exchange, then this is kind of the right thing for you.
Shari, and your last.
Yeah, I mean, this is an area that's very near and dear to our heart. So, you know, I would just say that if you're an issuer and you've completed a RegA or completed another private market securities offering, and you are interested in learning more, definitely reach out to us, because I think sometimes there's a misunderstanding about, you know, what the cost is and what an issuer has to do to actually come on to an alternative trading system. And so it's important just to arm yourself with that education for yourself and for your cap table, for your investors.
That's a great point. It's like anything else. Get the education, talk to the people, figure out, because it's your full cap table, not just the Reg A's, because you got to think of everybody. So obviously we're now at the part of the session where we want to hear from you. Ask Shari, Andrew, any of the questions. So Roland, I'm going to bring you in so you can ask a question.
Hi, thanks for the conversation. How do you deal with international participants? So you talked a lot about US state laws. How do you deal with existing, you know, Reg A plus shareholders?
I can take that. So through the lens of a regulatory, you know, really what we've done is we work with international broker-dealers to make sure that all of the local laws per that jurisdiction are handled. Now, I know there are many platforms that only will work with US shareholders. However, we do have a network of international broker-dealers, but I think it's important to realize that you're going to have to, there are jurisdictional rules that you need to make sure are being followed if you are providing that infrastructure. And to Oscar's point, if they aren't followed, you could come into a situation where you have to actually give the money back to the investor. So just be aware, it's very complicated on the other side when you start going, both in the United States, but especially when you start going outside of the United States. Some countries are, you know, fairly easy. Some countries are really difficult. You know, our goal in accommodating that was really to involve a professional broker-dealer at the other end of that trade.
Perfect, thank you. All right, Trung, bringing you in, you have some questions.
Hey, how's it going? Can you actually walk us through a use case if I'm an issuer and I want to list on the platform? Once it gets listed, how does a secondary investor discover it, and what do you do as an issuer? Are you also promoting the offering, like the secondary offering, with your network, or is it the broker dealer that pushes it out to their network? And how is that process? Is it as simple as buying shares with KoreConnect's platform and whatnot?
So excellent question. I will first say that, and I know this is a technicality, but on an alternative trading system, you're not listed because we're not a securities exchange, but so we admit you, but that's a minor point. I've been in this business for a little too long. But that sort of technicality aside, once an issuer is admitted onto the alternative trading system, the way that it works is that the entire investor base on the alternative trading system is allowed to purchase shares on that system. Oscar, and we have worked with Oscar to facilitate the trading directly from the KoreConnect's system. And investors can also come in from sort of the front end of Rialto, just log in directly to the system from the Rialto front end. But probably the easiest way, should you be an issuer utilizing the KCX system, is to, you know, go into the system. The subscribers will see that the investors will see on the dashboard and trade now. Is that it, Oscar? Trade now button?
Trade
Trade. And you know, from there, they get launched into Rialto's system. The way that it works, and again, this really depends on the issuer, the conversation when we do setup of an issuer. Our normal protocol is every day, 3 times a day, there's a cross. And so we do not offer continuous matching. We're not looking to facilitate volatility in trading. We're not looking to facilitate, you know, people coming in and making big bets. What we're looking to do is enable investors to monetize their investment and with the least friction possible. So the way that we do that is we gather interest for matching in a transaction at certain points in time. And then those transactions, we are embedded or integrated with both the banking rails as well as the cap table rails to then enable that to be completed and the beneficial ownership to be changed. Did I answer your question?
I'm bringing him back in. He's got another question here. So
Good.
Trung, another.
Thanks. Sorry. So I understand that you there's a trade button in the back end, and then you're allowed to trade, and you're not like the exchange that fluctuates with a lot of volatility and whatnot. So I guess the follow-up question is that how does an investor on the secondary market discover you? Are you the broker dealer doing marketing, or just like a RegA in a primary issuance? We're also doing the marketing, saying, hey, now we're available here if you want to buy the shares as a secondary.
So in terms of showing interest, anyone that's on the ATS, any investor that's on the ATS, or we call them subscribers on the ATS, will have access to the security, to your security, to be able to purchase your security. And if you want to think of it like sort of a Netflix, where you've got different securities that are available, and you can find them through different filters, you know, sector, different filters like that. That's really the communication, the ability to bring investors on the buy side in. I am gonna reserve the comment on you advertising to your network for Andrew, because I think he's better placed from a legal perspective to answer that.
Yeah, so I think certainly from you are certainly permitted as the issuer to identify that you are making this trade, that you have been admitted to the trading facility, and that's available to your investors and to secondary purchasers. It's just kind of that objective statement, absolutely fine. If you are entered, then you can reference to your reported results that are in your ongoing reports and things of that nature. You can include in your ongoing reports that you have this facility. So you are certainly allowed to kind of publicly advertise that this is the case, this is happening. It's just a matter of, you still need to be cautious in your communications, that you're not using too many adjectives that are sort of not supported. As far as adjectives. And while the ATS would be able to, I imagine it would be able to identify sort of who's admitted, they're not going to do they're not going to do the solicitations on your behalf. They're not going to try to talk about how this is a great investment opportunity for, but more just these are the issue. These are the companies that are available and that have been admitted.
And I was just going to add something very quickly. And to follow up on that, we have a compliance department that reviews communications. So if you're unsure, you're not on your own to figure out what you should be saying and not saying. And you should really lean on your lawyer and your broker dealer to make sure that any statements that are made are, made in compliance.
That's good. I was going to lead to that, but I got one question that I don't know if anybody was asking. So obviously during the primary capital raise, I'm working with these investor acquisition firms that help me bring traffic to my primary raise. Am I allowed to use them for the secondary to bring awareness? Am I able to do that? And of course, in a compliant manner.
Certainly it has to be done there's nothing wrong. There's nothing that is inherently prohibited about raising awareness of secondary trades and secondary market opportunities. And still, just the language needs to be careful, because there are a lot of cases out there of companies that are trying to pump up their secondary market valuations in a way that sort of crosses the line, and so that's what needs to be avoided. But generally, there's no, and so it's really more about the accuracy of the language and making sure that your public statements are consistent with the information that any sort of all your other sort of official information that's out there. But there's nothing inherently prohibited about it. It's just a matter of doing it correctly.
That's what I was going to say. I was going to say it's absolutely allowed. You just need to make sure that the firm that you're working with, that one, you include someone from the legal and or broker-dealer perspective to make sure that it complies, because a lot of investor acquisition firms or marketing firms just this isn't their specialty, right? Securities law. So we need to make sure that those are all being made in compliance. But building a brand, building a brand is what you want to be doing.
Mm-hmm. Yeah, and it always comes back. You have the resources to go to, so it's not like you don't know where to go. You go to the ATS compliance, you go to the legal counsel who got you there. You should always be in your mind, I'm about to do this, trigger that conversation piece. We got 3. So Richard Ross, here we go. Ask your way.
Can you hear me okay?
Yes.
Yes.
Oh, good, thank you. I apologize if this is a completely misguided question, but can one use security tokens to offer one's Reg A plus company to the community, to the masses? And is there any problem, if that's true, is there any problem with secondary markets for security tokens?
Yeah. Do you mind if I say something first, Shari?
Yes.
So
I figure, Oscar, you know this because you've run conferences.
Well, no, it's not that. It just, so first of all, look, I've seen the companies that have been trying to apply using that terminology. And quite often the SEC is going to put you in this long bucket list of you're not going to get anywhere because you're going to have to explain yourself what that is. Are digital securities being traded? So what we haven't told you here in this discussion, if you haven't figured it out yet, I'm going to tell you, Shari will as well, the only way Rialto, CrowdCheck, all of us can work with you from the minute that somebody goes to your website, clicks a button and says, I want to invest $100. I want you to pay attention to that, $100. And then for Shari one day to trade that, the only way it can happen, it is on a blockchain. It's completely, but it's a permission-based environment. But the end user is not buying it because it's a digital security. They're buying it because they love your company. They want to invest. They want to put $100 into your company. The tokenization, from my perspective, is secondhand. In fact, all our clients don't even realize that they're already there. and where the investor will ultimately benefit from digitization and some people, tokenization, is that when you do that trade and it's so cost effective, you ever wonder how? Now you know. Shari?
That's exactly it. I mean, really, the digital, so the 2.5 years that it took was really to get approval to facilitate the matching. I'm choosing my words very carefully, to facilitate the matching of trades and really facilitate this type of market in digital form. That's what took 2.5 years. We received our broker-dealer license and alternative trading system license back in 2017. So that the expansion that we requested took so long because it was in digital form. And I think it's important when we start talking about digital securities to think, first, these are simply securities that are blockchain based, and that enables certain operational efficiencies, as well as very interesting things around the ability to fractionalize real assets. And so those are the 2 primary reasons. There are other ones in terms of being able to completely change capital formation that I would love to talk about in another webinar. We have a minute left, but to answer your question, absolutely, that's the form. in which we do it. We just we aren't digital security forward. We're doing it to facilitate more of an operational efficiency on the back end and to be able to offer this out at the cost point that we can.
Yeah, that's a great sign. Closing off on that point is that we believe, all of us obviously believe, that blockchain is going to transform the private markets. We believe, but we're not going to be able to make the leap from here over there just overnight. We've now realized, look how long it takes to get a license, 2.5 years. So this is just to give you one perspective. 2.5 years needs to go in just for the ATS to get registered, to be able to facilitate it. And then we're not done yet. I mean, it requires all these other participants to also be connected to it. And that connectivity is and it's not just one connectivity, it's all the connectivity points, because ultimately, never forget, that investor, $100 has to be in the most efficient way to trade. Okay, so when you compare it to others out there, they're saying, oh, they're doing trade. Those are $250,000 trades, $500,000 trade. That's a different ballgame altogether. Shari, you guys have done 9 other ATSs. You know that world. That's a different ballgame. $100, it's, again, 2 extremes, but we're finally here. That's the exciting conversation. We can have this conversation. I'm going to give one question to Andrew, because I want to know, because up until recently, I was made aware that a issuer could not say in their filing, Form 1A filing, that their shares could be available on secondary market, because at the time, from the SEC's point of view, none existed. Will that now change? We can say that, or is the SEC still going to keep coming back saying you can't mention it in your?
Well, the SEC is going to be they're mostly concerned about, are you overselling your, if you're because they knew sort of the inherent limitations and difficulties of establishing a secondary trading market for RegA securities sold under Regulation A. And so if companies were sort of overselling that we are going to do this and you will benefit from it, but we don't yet have any engagement for it, they're going to take issue with that, because you're trying to create value. You're going to look at it and say the issuer's trying to create value in it, but when there's nothing there. And so now, by saying, but you know what, that there are these options, we are in discussions with Rialto, we are in discussions with I think that, so long as it's still properly phrased, that it's not a guarantee until there is an agreement in place, that there are going to be ongoing costs and expenses for it. There's no guarantee that a trading market will develop at all, even if admitted to the ATS. Then they'll be good with it.
Okay, perfect. Well, this was a great discussion, and it's going to keep evolving. It's going to become a lot of fun in the next little while. The conversation piece, we're going to have a webinar on research. I know it's dear to Shari. Her and I have had many discussions on this, because we see it such a critical piece. But of course, there's so many other elements to the discussion as well. The onboarding of a company, how is it specifically? And with your feedback here, this is helping us understand what you want to know, so we can bring it to you, so you're better prepared. So I just want to say thank you, and my baby in the background, Maximus, wants to say thank you as well, for spending the time with us this morning. And we hope you'll make it to our next webinar at 3:30 this afternoon. Until then, thank you.
Thanks.
Andrew, Shari.
Have a great day. Thanks so much.
Thank you, everyone. Take care.